Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 5th May 2022. In the international market, FOMC federal fund rate increased by 50 basis points in line with expectations. The new federal fund rate now stands at 0.75 percentage points to 1 percentage points, with current yield curve federal fund rate expected is at 275 to 3% by year's end. Also, Fed outlined a program where eventually it will reduce the bond holdings by $95 billion per month. Fed said the committee is not actively considering 75 basis points hike. Thus, the fear of much larger rate hike was subsided and more damage to the yield curve was stopped. US 10-year is now trading at 2.94 percentage points and German 10-year bonds are at 0.97 percentage points. In the crude oil market, crude is trading at $110.6 per barrel. Short-term range for crude is 108 to 114. In the currency market, the dollar index or DXY is at 102.49. The overbought dollar came back after the rate hike was as per the market expectation. Today's range for dollar index is at 102.11 to 102.90. USD CNY Chinese yuan is at 661. USD INR with a low of 76.58 closed at 76.42. Resistance at 76.10, support at 76.40. Trading strategy for USD INR. US Fed did not disappoint the rupee at all as the rate hike was in line with the expectations, 50 basis points. Hence, the overbought dollar is cooling off, giving strength to the emerging currencies including INR. LIC IPO has opened yesterday and it is going to bring a lot of US dollars in India, and we expect the rupee strength. LIC IPO will close on Monday and hence Knight Research stance for short term is reversed. I repeat, Knight Research stance for short term for rupee is reversed. Knight Research now expect the rupee will strengthen in the coming few days and may try to get below 76 mark on the back of strong dollar inflow. Medium term outlook will still remain weak for rupee, but short term strength is visible. In the domestic market, yesterday was an action-packed day for Indian bond traders' perspective. RBI Governor Shaktikanta Das called an emergency meeting yesterday afternoon, and here is the outcome of that meeting. Repo rate hike by 40 basis points and now the repo rate is at 440. Cash reserve ratio CRR hike by 50 basis points effective from 21st May fortnight. A 50 basis point CRR hike is equal to a reduction of approx 87,000 crore liquidity. Standing deposit facility SDF also raised by 40 basis points to 4.15 percentage points. Marginal standing facility MSF at 465 percentage points. On the back of this extraordinary stance change, 574 2026 closed at 701 versus 665. Yields are up 36 basis points. You heard it right, the 5-year paper 574 2026 closed at 701. 654 2032 closed at 738 versus 712. Yields are up by 26 basis points, and 667 2035 closed at 753 versus 732. Yields are up by 19 basis points. As you can see from the risk reward perspective, the 5-year paper 701 is much more attractive given the duration risk involved in the larger papers. This has been Knight Research stance for the last many months, that stay in the 4 to 6 year maturity and get rid of longer papers. Those who had listened to us, reshuffle the portfolio, did the HTM AFS shifting, would have saved a lot of ideas by now. The shorter end of the yield curve will start lifting up and the yield curve will become more and more flattish. Overnight call rate was at 430. Knight Research expects the overnight call rate will settle down at 415-420 pretty soon. In the OIS market, 1-year OIS was at 568 versus 503, a 65 basis point jump in a single day in 1-year OIS. 2-year OIS at 641, 5-year OIS at 699. As per the OIS curve, market is expecting repo rate at 515 by October 22. I repeat, market is expecting repo rate at 515 by October 22. and by March 23 market is expecting repo rate above 550. Trading range for 654 2032, 732 to 741. 741 remains a strong support for 10-year benchmark, which has not been breached yesterday as well. So we remain hopeful that 741 will be intact. After breaching 741, do not even jump to buy anything below 750. Knight Research view: the reaction to RBI's rate move was too steep. As the Fed has also acted in line with the expectation, we expect the bond markets to cool off in few days, but the rates are bound to go higher, and the 10-year at 750 is surety in near future. Knight Research has been very vocal on highlighting the fact that the non-SLR CPs and NCDs are your best friends in this market, and we have been a vocal advocate of non-SLR CPs and NCDs. GSEC will continue to bleed, and IDR is certainty. Better to take selective credit risk rather than a duration risk and sitting on IDR. Our Knight Research team had conducted a webinar on the outlook of Indian bond markets for FY23, and the prophecy was turned right. In order to bring your portfolio in line, reach out to our expert team led by Mr. Pawan Somani, ex-Treasury, Bank of Maharashtra and Suryoday Small Finance Bank, and Mr. Chandrakant Sharma, ex-Treasury, Punjab and National Bank. That's it for today. See you tomorrow with the new episode from Night Snippets.